Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 129, recorded here on August 18th, 2024. This podcast is for entertainment only, is not investing advice. So, as always, please do your own homework. All right, we will start with the market update outlook, get into the top Bitcoin news, and then we will talk about the featured post on Bitcoin Fortress Substack and our shoutouts. So let's get into the news. What a difference a week makes. Wall Street's benchmark S&P 500 index on Friday charged to its best weekly advance since late October last year with a 4% gain. The gauge also snapped a 4-week losing streak and is now just 2% below its record close. This week's economic data on inflation and retail sales, along with upbeat comments from consumer bellwether Walmart, continued to quell economic slowdown fears and gave investors the confidence to dive back into growth areas. The S&P 500 information technology sector surged 7.51%, its best weekly gain since early November 2022. The favorable economic indicators also led to market participants dialing back their expectations for an aggressive 50 basis point rate cut by the Federal Reserve at its meeting in September. For the week, the S&P 500 climbed 3.9%, the Nasdaq Composite gained 5.3%, and the blue chip Dow added 2.9%. Looking ahead, the spotlight next week will be on the Federal Reserve's Jackson Hole Symposium from August 22nd to 24th, organized by the Kansas Fed. The symposium is one of the longest-standing central banking conferences in the world. The event will bring together economists, financial market participants, and U.S. government representatives to discuss long-term policy issues of mutual concern. Traders will be paying close attention to the speakers at the event, including Fed Chief Jerome Powell, for any comments on monetary policy easing. Also on the economic calendars is an update on new home sales and the minutes of the Fed's July Monetary Policy Committee meeting. Second quarter earnings season will start to wind down, but there are still some major names scheduled to report their results, including retailers Target and TJX, cybersecurity firm Palo Alto Networks, and China's largest search engine provider, Baidu. Jumping into the top Bitcoin news, we'll start with Block 857323, important news of the week by No BS Bitcoin. UN Cybercrime Convention draft treaty finalized. The United Nations has finalized the draft of the UN Cybercrime Convention. The treaty establishes a global legal framework for cybercrime and data access, allowing authorities to obtain electronic evidence and request user data from internet service providers across nations. It also requires member states to identify, trace, confiscate, and seize crime-related assets and collect real-time data for requesting states. The convention will be voted on by the General Assembly in the fall, where it is expected to pass. Sounds like more authoritarianism to me. Public data company breach. A class action lawsuit claims Jericho Pictures Inc., National Public Data, was hacked earlier this year, exposing 2.9 billion confidential records, primarily of U.S. citizens, stolen by the hacker group US DoD. The exposed data for potentially hundreds of millions of people includes full names, social security numbers, current and past addresses, and information about relatives, including deceased family members. Well, I will say if you don't have your credit frozen by now, you better get it done. It's free. You can go to all three of the credit bureaus and just freeze it. It's a pain in the butt when you have to apply for anything that requires credit because you have to unfreeze it, but just know that your information is out there for sure. OpenSats announced a new round of grants focused on Bitcoin Core. The latest grantees include contributors at TDB3, at David Gumberg, at Hodlinator, and the Bitcoin Core app project. BTrust announced Q3 2024 grant recipients. Jay-Z and Jack Dorsey funded Bitcoin nonprofit BTrust, focused on nurturing Bitcoin developers from the Global South, announced the recipients of its Q3 starter grants and new members of its BTrust open source cohort. Nigerian Bitcoiner James Otudor embarks on a major legal battle. Nigerian citizen has filed a landmark lawsuit against key Nigerian government entities, arguing that the ongoing targeting and persecution of Nigerians who own and use Bitcoin and other digital assets constitute a clear violation of their fundamental human rights. And we wish him luck with that. Nigeria freezes 37 million USDT. The Nigerian government has frozen over $37 million in USDT, believed to belong to organizers of the hashtag #EndBadGovernance protests. The Economic and Financial Crimes Commission classified the funds as proceeds of money laundering and terrorism financing. How about that? Isn't that convenient? El Salvador tracks $1.6 billion for port infrastructure. The country is set to receive a $1.62 billion investment from Turkish company Yilport to develop 2 seaports, supporting the construction of its ambitious Bitcoin city. This marks the largest private investment in the country's history. Pretty amazing. Me Premier Bitcoin is raising 5 Bitcoin. The nonprofit focusing on open source Bitcoin education plans to orange pill 100,000 students. Check out the project's latest Geyser campaign here, and there is a link. And of course, I'll include links to everything I'm going over here in the show notes. U.S. government wants a 30-year sentence for Roman Sterlingov. U.S. prosecutors recommend a 30-year prison sentence and a $100,000 fine for Roman Sterlingov, a Swedish-Russian citizen convicted of money laundering and running an unlicensed money transmitter tied to the Bitcoin mixer Bitcoin Fog, reports The Rage. Alexei Pertsev's defense is running out of funds. The Tornado Cash developer, who is facing up to 64 months in prison for writing and publishing open source code, released a video calling for an additional $750,000 to $1 million to cover ongoing legal fees. Unfortunately, the campaign accepts ETH donations only. Russia and Venezuela block Signal. Russia's telecommunications watchdog has restricted access to the Signal encrypted messaging service, citing violations of anti-terrorism and anti-extremism laws. The messenger was also blocked in Venezuela following the disputed presidential election results from late July. Signal acknowledged that its services are blocked in some countries and advised users to enable the censorship circumvention feature in the app settings. Signal settings, privacy, advanced censorship circumvention. SimpleX announced $1.3 million investment. The privacy-centric free and open source messaging software raised a $1.3 million seed round led by Jack Dorsey with participation from the Asymmetric Capital Partners VC fund. The funds will be used to expand its team and make significant product enhancements. Israelis robbed of $700,000 worth of Bitcoin in Costa Rica. 11 Israeli tourists were attacked by 8 men who overpowered their security and stole $700,000 in Bitcoin. Analysis of surveillance footage suggests that the robbers may be current or former police officers, reports local media. Massive kidnapping in Malaysia. According to a local news report, up to 18 individuals have been involved in the kidnapping of a Chinese national and a local woman for a $1.2 million ransom in unspecified cryptocurrency. 10 individuals have been arrested, 4 were shot dead, and 4 are still at large. Thailand launches crypto regulatory sandbox. The country's securities watchdog has launched a sandbox for businesses to study and navigate the balance between innovation, Bitcoin, and digital assets and regulatory restrictions. IRS shares new crypto tax form. The IRS has released an updated draft of the 1099-DA tax form for crypto brokers and investors to report proceeds from transactions. Starting in 2026, investors using brokers and centralized exchanges will receive this form to report taxable events. The new version is more streamlined than the initial draft from April, and the public has 30 days to provide the IRS with comments, reports CoinDesk. CoinCenter has achieved a significant victory in an ongoing legal challenge against the 6050I reporting scheme, which would have required recipients of over $10,000 in cryptocurrency to collect and report personal information to the IRS without a warrant. Metaplanet now holds 303 Bitcoin. The publicly listed Japanese investment firm has acquired an additional $3.4 million worth of Bitcoin, raising its total holdings to 303 coins acquired for approximately $20 million. Goldman Sachs holds over $400 million in spot Bitcoin ETFs. The banking giant revealed $418 million in Bitcoin ETF holdings, indicating a growing institutional interest. Their largest position is $240 million in BlackRock's iShares Bitcoin Trust. Meanwhile, Norway is stacking Bitcoin via MicroStrategy. Norway's government pension fund Global, managed by Norges Bank Investment Management, has invested $217 million in MicroStrategy, giving it a 0.89% ownership and 0.45% voting rights. The fund, which manages 18 trillion krona, or $1.7 trillion, has been purchasing MicroStrategy equity since 2008 and has more than tripled its investment in the past year, according to a Protos report. Similarly, South Korea's National Pension Service acquired $34 million worth of shares in MicroStrategy. Bitcoin miner Argo repays a $35 million Galaxy bailout loan. Argo secured a $35 million loan from Galaxy Digital in December 2022 and sold its Helios mining site in Texas to Galaxy for $65 million. The proceeds were used to repay other liabilities during the bear market, reports the Miner Mag. In other miner news, BitDeer saw a 50% increase in Q2 2024 gross profits by doubling mining capacity from 3.8 to 7.3 exahash per second, partly thanks to its Seal miner hardware. However, the company still reported a net loss of $17.7 million. Core Scientific to offer $350 million in convertible senior notes. The company announced that these unsecured notes will mature on September 1st, 2029, with interest payable semi-annually. Terms like interest rate are still pending, and an option to buy an additional $52.5 million in notes may also be granted to initial buyers. Leadership overhaul at Bitfarms. Ben Gagnon, recently promoted to CEO of Bitfarms, has been appointed to the board of directors. Founder and former chairman Nicholas Bonta has stepped down from the board effective immediately and has been replaced with lead director Brian Howlett, who is now the independent chairman. Liam Wilson will be the new chief operating officer of Bitfarms effective August 26. Riot Platforms increases ownership in Bitfarms to 18.9%. The company announced the purchase of an additional 1 million Bitfarms shares, bringing its total holdings to about 85.3 million shares. Marathon buys 4,144 Bitcoin. The largest public Bitcoin mining firm by realized hash rate increased its strategic holdings using proceeds from a $300 million convertible senior notes offering. Boy, there sure is a lot of demand for those convertible senior notes. BitDeer to expand operations with $150 million convertible notes offering. BitDeer Technologies Group, a Singapore-based crypto mining company, has announced plans for a $150 million public offering of convertible notes due in 2029 to expand its data center and develop ASIC-based mining rigs. Meanwhile, CleanSpark orders 7.8 exahash per second of S21XP miners for $167 million. The second largest public Bitcoin mining firm by realized hash rate has announced an expansion of its mining capabilities with a pre-order of 7.8 exahash per second for $167.7 million, according to the Miner Mag. Iran goes after unauthorized Bitcoin miners. According to local media, the country is offering a $20 bounty to anyone who reports every single unauthorized cryptocurrency mining equipment. Iran is reportedly facing a severe heat wave that's currently crippling its industrial production. IMF experts propose 85% electricity price hike for Bitcoin miners. Using outdated and widely debunked data, IMF economists have concluded that basically an 8.9 cents per kilowatt hour tax would yield $5.2 billion in additional revenue and cut carbon emissions by 100 million tons. Pleb Lab's Startup Day in Mexico City, the event set to explore the latest innovations in Bitcoin, will take place on September 19th, 2024. You can get your tickets here. There's a link that you can go to. The Lugano Plan B forum is set to take place on October 25th, 26th in the city of Lugano, Switzerland. Early bird tickets are still available here, and there's a link in the article. Op.next is a technical and workshop-heavy conference exploring Bitcoin's next soft fork. It will take place at the Fidelity Center for Applied Technology in Boston, Massachusetts on Saturday, November 9th. Santa Monica Open Source Bitcoin Festival. The newly opened Bitcoin office in Santa Monica has announced an Open Source Bitcoin Festival set for October 18th, 2024. And finally, the Mining Conference 2024 will take place on September 27th to 29th in Minnesota. Tickets and more information are available here, and there is a link. Moving on, this is from Bitcoin.com news. This was posted today. Fedwatch tool and Polymarket indicate strong odds for September rate cut. This September, all attention will be on the U.S. Central Bank as the FOMC meeting rolls around, where the Fed will make its call on the federal funds rate. This time, the market is anticipating a rate cut, a change from the earlier months when expectations were for the Fed to hold steady. As predicted by CME futures data, the central bank stayed the course during the last FOMC meetings without any adjustments. This time, the stakes are higher, with the FOMC meeting just 3 weeks ahead of the U.S. presidential election. Adding to the tension, economists and analysts have been sounding alarms about a potential recession, and the August 5th stock market dip only heightened investor anxiety. According to the CME Fedwatch tool, there's a 75% chance of a 25 basis point rate cut, while a 50 basis point cut holds 25% odds. Although Fedwatch is typically on the money, it has missed the mark on a few rare occasions. Meanwhile, Polymarket bettors are also placing their wagers on the Fed's next move in September. One bet suggests an 82% probability of a 25 basis point rate cut. The market dubbed Fed interest rates September is currently valued at $4.9 million with a 14% chance of a 50 basis point cut and a 6% chance for the riskier bet of no change at the upcoming FOMC meeting. The money printer is getting warmed up in the back room. Next up from Cointelegraph, this was posted on August 17th. Thought this was kind of interesting. Might explain the sort of disappointing side-by-side volatility Bitcoin price lately. U.S. Marshals are likely selling Silk Road Bitcoin, says a lawyer. United States finance lawyer Scott Johansson has said the U.S. Marshals Service is almost certainly in the process of selling Bitcoin seized from the infamous Silk Road marketplace. Johnson's assertions are grounded in a service agreement signed between the USMS and Coinbase in June. According to Johnson, the agreement indicates that once Bitcoin reaches Coinbase Prime, it is a clear sign that the USMS has either sold or is about to sell these assets. Johnson explained that the USMS has been sending Bitcoin to a custodial address in accordance with the agreement's terms. Given the agreement requires USMS assets remain completely segregated, whenever a transfer is ultimately made to CB Prime or other commingled exchange address, you can be sure USMS has already sold or is selling imminently, Johnson wrote. Formal confirmation of the transactions will come at the latest with the Department of Justice's Asset Forfeiture Program report for the fiscal year 2024 expected in January. Johnson also hinted at political motivations behind the timing of the sales, suggesting that the administration of President Joe Biden might continue these actions without pause. However, not everyone agrees with Johnson's interpretation. Ryan Lee, chief analyst at BitGet Research, believes that despite the initial concerns, the Silk Road Bitcoin is unlikely to be sold. This standoff in opinions reflects the broader uncertainty and speculation within the cryptocurrency community regarding government-held Bitcoin and its potential market impact. According to on-chain analytics firm Arkham Intelligence, the U.S. government transferred nearly $600 million worth of Bitcoin to Coinbase on August 15th. The Bitcoin was sent to a Coinbase Prime deposit wallet. Historically, large transactions by significant holders known as whales can have a substantial impact on Bitcoin's price. Investors often track these transactions to anticipate potential selling pressure. The U.S. government is currently the largest geopolitical holder of Bitcoin, a fact underscored by former President Donald Trump. Trump, who is the Republican Party's 2024 presidential candidate, has pledged not to sell any of the U.S. government's Bitcoin holdings if reelected, adding another layer of complexity to the issue. The 10,000 Bitcoin recently transferred were originally seized during the Silk Road raid in 2022. In that operation, the Department of Justice announced the seizure of 50,000 Bitcoin from the darknet marketplace. This significant on-chain movement of funds follows another major transfer in April when the U.S. government moved $2 billion worth of Bitcoin seized from Silk Road. Next up from Crypto Potato. This was posted on August 18th, today. These big U.S. banks bought spot Bitcoin ETFs in Q2 2024. The second quarter of 2024 ended with major United States banks offering institutional exposure to spot Bitcoin exchange-traded funds. Numerous second quarter 13F filings with the U.S. Securities and Exchange Commission revealed that these Wall Street giants acquired substantial shares of different spot Bitcoin ETFs for their clients. In the coming months, these entities could purchase the ETFs and add them to their balance sheets. First on the list is Goldman Sachs, the world's second largest investment bank by revenue. The institution reported spot Bitcoin ETF holdings amounting to a whopping $418 million. The bank disclosed that it owns shares of several funds, including BlackRock's iShares Bitcoin Trust, Fidelity's Wise Origin Bitcoin Fund, and Grayscale's Bitcoin Trust. Goldman Sachs investments also extended to funds issued by ARK Invest 21 Shares, Invesco Galaxy, Bitwise, and WisdomTree. Its highest holdings are in IBIT, amounting to $238 million, followed by $79.5 million in FBTC. Morgan Stanley is another Wall Street giant that reported spot Bitcoin ETF holdings, although the firm revealed a $269 million investment in GBTC in the first quarter. Its holdings reduced to roughly $189.7 million by the end of June. The GBTC shares were slashed to $148,000, while shares in ARK Invest ARKB totaled $1.6 million. Interestingly, Morgan Stanley's $188 million investment in IBIT made it the fifth largest holder of the fund's shares. The bank also urged its financial advisors to pitch Bitcoin ETFs to clients with more than $1.5 million net worth. Other Wall Street giants such as Bank of America, HSBC, and UBS reported smaller investments in spot Bitcoin ETFs. Bank of America holds $5.3 million in shares, mainly from IBIT and FBTC. HSBC acquired $3.6 billion, I think that's million, in ARKB, and UBS reported roughly $300,000 in IBIT and other ETFs. While Goldman Sachs, Bank of America, HSBC, and UBS took their time to purchase spot Bitcoin ETFs for clients, some entities like Wells Fargo and JP Morgan jumped on the bandwagon shortly after the funds were launched in the first quarter, however, with minimal investments. As more banks, hedge funds, and heavyweight entities invest in spot Bitcoin ETFs, analysts believe the funds are collectively on track to surpass the holdings of Bitcoin creator Satoshi Nakamoto by October. Next up from BitcoinNews.com, this was posted on August 16th, central banks of Norway and Switzerland increase investments in MicroStrategy. In a surprising move that signals a shift in the global financial landscape, the central banks of Norway and Switzerland have taken significant stakes in MicroStrategy, a US-based business intelligence firm best known for its substantial Bitcoin holdings. This strategic investment by Norges Bank and the Swiss National Bank indirectly provides these institutions with exposure to Bitcoin, marking an important development in the adoption of Bitcoin by traditional financial institutions. The decision by these central banks to invest in MicroStrategy is noteworthy given that the company has become a prominent player in the Bitcoin market due to its large BTC reserves. MicroStrategy, under the leadership of its co-founder, Michael Saylor, has made headlines for its aggressive acquisition of Bitcoin, positioning itself as the largest corporate holder of the digital asset. According to recent filings, Norges Bank, responsible for managing Norway's state pension fund, now holds 1.578 million shares of MicroStrategy, while the Swiss National Bank has acquired 466,000 shares. This represents a significant 60% increase in the SNB's holdings compared to the previous quarter. These investments have sparked considerable interest and speculation about the motivations behind the central bank's actions. The reasons for these investments are multifaceted, but two primary theories have emerged. One suggests that the central banks are interested in gaining indirect exposure to Bitcoin, viewing it as a strategic reserve asset. As Bitcoin continues to gain acceptance as a legitimate financial asset, central banks may be exploring ways to diversify their reserves beyond traditional assets like government bonds and foreign currencies. Since MicroStrategy is a significant purchaser of Bitcoin, it's plausible that the central banks of Norway and Switzerland sought to gain Bitcoin exposure by investing in MicroStrategy. This approach allows the central banks to participate in the potential growth of Bitcoin without directly purchasing the asset, which might be considered too risky or controversial for a central bank to hold directly. Another perspective is that the central bank sees MicroStrategy as a strong investment in its own right, independent of its Bitcoin holdings. Patrick Sainer, head of MicroStrategy at Swiss Re Institute, noted that neither Norges Bank nor the Swiss National Bank showed any signs of a positive outlook on Bitcoin, suggesting that the purchases could be part of a broader strategy of investing in high-performing companies rather than a direct bet on Bitcoin. Next up from Decrypt, this was posted on August 16th. As governments embrace Bitcoin, could it become a privacy threat? Bitcoin has become a hot topic ahead of the U.S. election following Donald Trump's recent endorsement of the cryptocurrency, and part of the Republican Party's crypto embrace hinges on central bank digital currencies, the dangers to financial privacy they may pose, and how to stop them. But what if Bitcoin presented the real privacy threat? In its most privacy-focused proponents believe that it does, and the U.S. government's embrace of the cryptocurrency through Trump's proposed strategic reserve or other measures would only make matters worse. Bitcoin would be worse than normal CBDCs from a privacy point of view because at least with CBDCs, your neighbors can't surveil your financial activity, only the government. Rafe, a pseudonymous contributor to privacy-focused Bitcoin wallet Wasabi, told Decrypt. Privacy advocates in the space have been saying for some time now that the lack of privacy on the Bitcoin network and the fact most crypto users aren't seemingly bothered is a growing concern. They worry that governments could use the open, transparent, and easily traceable Bitcoin blockchain to monitor citizens' spending and other activity on the network, and for good reason. In many ways, law enforcement agencies around the world are already doing exactly that. In other words, the potential threat to financial privacy posed by CBDCs, either real or imagined, already exists on Bitcoin and by design. But are those concerns overblown? Central bank digital currencies, or CBDCs, are, as the name suggests, centralized assets. Unlike virtual coins like Bitcoin or Ethereum, CBDCs are operated by a centralized entity, usually a government. Both the crypto community and some U.S. lawmakers have warned that such a technology is a threat to liberty. Trump, ahead of the election, has especially ramped up the rhetoric. In January, he called CBDCs a dangerous threat to freedom and said he would never allow the creation of one. He has touted Bitcoin as a remedy and wants the asset to be exclusively mined on American soil. He's not the only one that wants Bitcoin to be a big part of the U.S. economy. Bitcoin Senator Cynthia Lummis from Wyoming introduced a bill just 2 weeks ago that aims to build a government Bitcoin reserve mirroring Trump's proposal. Crypto users and like-minded politicians don't like the idea of a government-issued CBDC because it could allow for broad oversight of the public's financial activities and potentially restrict spending. China, the most advanced country in terms of CBDC testing and development, already closely monitors its citizens' spending. If Bitcoin becomes a payment system used by a majority of citizens, could governments use it like a CBDC? Bitcoin is, by design, is transparent. Every transaction is recorded on a distributed ledger for people to see. This has long been a talking point for Bitcoiners. If two Bitcoiners send and receive money in a transaction, it isn't difficult to see what the other funds they have sitting in their personal wallets, where they've been, or where they go next. Law enforcement officials have even said they love it when criminals use Bitcoin because it's so easily traceable. Governments have gotten very good at monitoring that ledger and tracking transactions through the ledger, and if they do, to the extent that they're able to connect your physical or real world identity to your digital address, they'll be able to see what transactions you're making. Associate Professor of Economics at Florida Atlantic University, William J. Luther, told Decrypt. Luther added, however, that Bitcoin can offer a high degree of financial privacy, but users must take additional steps to operationalize it via privacy-enabling tools. Such tools are commonly referred to as mixers, which help anonymize transactions that would otherwise be traceable. High-profile figures such as NSA whistleblower Edward Snowden have pushed for privacy-focused Bitcoin solutions, only for U.S. authorities to crack down hard on tools which aim to anonymize crypto transactions. In May, U.S. authorities arrested the founders of Bitcoin mixer Samurai Wallet, accusing them of conspiracy to commit money laundering. The app allows users to obfuscate their transactions by mixing them with others. Craig Raw, developer of the Bitcoin Sparrow wallet, told Decrypt that although techniques work to privatize Bitcoin, the current U.S. administration seeks to suppress or access to them entirely. But despite the warnings, worries that Bitcoin could be used like a CBDC don't sway other privacy advocates. Blockchain consultant at Willenheimer and former member of the Magic Monero Fund Committee, Scilla Brimmer, said that although Bitcoin is an excellent surveillance tool and governments will use it to trace criminals, it's unlikely to be used as a CBDC. She added that disagreements over whether Bitcoin works as a cash or digital gold would make it hard for authorities to regulate and therefore difficult to ever be used as a currency. Nicholas Anthony, policy analyst at the Cato Institute's Center for Monetary and Financial Alternatives and a fellow at the Human Rights Foundation, likewise told Decrypt that a government controlling its citizens through blockchain would be very difficult and would lead Bitcoiners to go elsewhere. If something like that were to occur, I very much imagine that the rest of the space would fork the chain and try to go elsewhere, he said. So considering by its very nature Bitcoin is outside of the direct control of governments, I don't see how it could be used to that extent, he said. Still, those working on privacy solutions for Bitcoiners bemoan that not enough of the community cares about the topic. Snowden again warned of the dangers of Bitcoin's lack of privacy at the Bitcoin 2024 conference in late July, claiming that AI could be used to surveil financial transactions in Bitcoin's public ledger is a prime location to train such AI models. Wasabi developer Rafe warns that if Bitcoin does end up being used by oppressive governments, it may be too late by the time people notice. Most people don't care about their freedom until it's taken away from them, he said. If nothing changes, we are looking at a pretty grim future. So, interesting piece, and it's certainly worth thinking about. But I think I'd rather have Bitcoin than a CBDC anyway, and I'm sure that they're going to work on privacy tools. And Layer 2 has a lot of potential, and we haven't even seen Layer 3 or Layer 4 yet. So, I don't know. I think that probably the concerns are a little bit overblown, but still, it's good to think about these things. And finally, this is from Bitcoin Magazine, also posted on August 16th. Lava Loans Protocol V2, DLC-based Bitcoin collateralized loans. The Lava Loans Protocol V2 is a scheme designed by Lava building upon discrete log contracts to facilitate a trustless Bitcoin collateralized loan system. The huge implosion in the market cycle last cycle caused by centralized platforms facilitating Bitcoin-backed loans showed that left unchecked, such products and services can present a massive systemic risk to the entire market in the ecosystem. Lava seeks to provide the same utility users of such centralized platforms sought in a decentralized and atomic fashion using DLCs. DLCs, for those unfamiliar with the concept, are a smart contract designed to settle a certain way depending on the outcome of some event outside of the Bitcoin protocol, i.e. the price of Bitcoin, the outcome of a sports game, etc. This is done by depending on an oracle or a set of multiple oracles who sign a message attesting to the actual outcome of the real-world event. These signed messages are used as the basis for adapter signatures that unlock specific pre-signed transactions that settle a contract a certain way. The benefit of DLCs is that they can be done privately. As long as the oracles publish the keys they will use to sign outcomes for specific events at specific times, any user can take that information and construct pre-signed transactions to settle correctly based on the range of possible outcomes without the oracle ever knowing that a contract exists. The oracle simply publicly broadcasts the signed message at the appropriate time, and that gives both users all the needed information to settle the contract correctly. Lava is designed to make use of a modified variant of DLCs in addition to stablecoins on other networks in order to facilitate a Bitcoin collateralized loan that can be entered into atomically and trustlessly, i.e. guaranteeing that the lender cannot gain control of Bitcoin without releasing control of the stablecoin to the borrower. The funding of the DLC is a two-step process in the Lava protocol, given the requirement that the stablecoins given in exchange for the collateral being locked in the contract must be atomic. In the first phase, the borrower creates a script that allows them to claim their coin back after a time lock, or allows the lender to complete the funding with a hash preimage and signature from the borrower. Then they sign a transaction that moves the coins from this staging address into the DLC. The lender then exchanges a hash lock for use later in the protocol with the borrower. From this point, the lender needs to fund a similar atomic exchange contract with the borrower on the chain hosting the stablecoin. This contract allows the borrower to claim the stablecoins with the same preimage used to finalize the DLC on Bitcoin, or the lender to reclaim the stablecoins after a timeout. The contract on the alt chain is also collateralized with extra stablecoins that remain in the contract and cannot be claimed back by the lender until after the completion of the contract. This will be explained later. After the setup phase, the borrower releases the preimage to the hash lock, claims the stablecoins, and enables the lender to move the Bitcoin from the staging address into a finalized DLC. At this point, the contract is active. During the lifetime of the contract, there are three ways that the loan can be settled, either at expiry or during its lifetime. Firstly, the lender can execute the DLC with the borrower's adapter signature and an attestation of the current price from the oracles. Secondly, the borrower can execute with the lender's adapter signature and an attestation from the oracles. Lastly, the borrower can repay the loan on the alt chain, enabling them to claim back Bitcoin collateral when the lender claims their repayment and stablecoin collateral. All of these execution paths disperse the appropriate amount of Bitcoin to both parties based on the market price attested to by the oracles. The repayment path makes use of the second hash preimage that the lender generated during the setup. The DLC script is modified, allowing the borrower to claim back the collateral at any time during the contract lifetime, as long as they have the preimage that the lender has generated. On the alt chain, the stablecoin contract is also established to require the lender to reveal the preimage to claim back the repayment and collateral. This construction for repayment is added to deal with the incentive where a repayment is made, but the lender does not finalize the repayment because the interest payment on the loan outstanding is greater than the interest that could be earned from them issuing a new loan. This is also the reason that the lender is required to collateralize the alt chain contract with extra stablecoins, creating an incentive for them to redeem a repayment. Without doing so, they cannot claim the collateral back, thereby creating an incentive for them to honor the repayment and release the Bitcoin collateral even when there is a financial incentive due to the interest payments to not do so. Once the lender releases the preimage to claim back the repayment and the stablecoin collateral, the borrower is then capable of unilaterally spending the DLC output by using the released pre-image. This guarantees that the borrower is able to unilaterally reclaim their Bitcoin collateral after the lender takes possession of their loan repayment. Like the DLC Markets proposal, Lava supports a liquidation procedure. In the case that the Oracle attests to a price that is below a predefined liquidation level, pre-signed transactions corresponding to the liquidation event could be used by the lender to claim the entirety of the collateral. This is to guarantee that during the event of a massive price swing that lowers the collateral value beyond the loan value, the lender is capable of liquidating it when necessary to cover the stablecoin value the borrower claimed. Otherwise, they could be faced with the risk of waiting until the contract expiry and being stuck with Bitcoin that is less valuable than what they've lent out, resulting in a financial loss for the lender. In addition to the liquidation procedure, there's also an emergency recovery option available long after the contract expiry. During setup, signatures for pre-signed transactions long after contract expiry are exchanged. These are used in the event that the oracles fail to deliver signatures on price attestations, or in the event that the borrower stops cooperating with the lender or vice versa. The lender is capable of using one of these to claim the entirety of the Bitcoin collateral in the event the oracles don't attest to the price, or the borrower becomes non-cooperative in that case. This is to ensure that the Bitcoin in the DLC is never at risk of being burned. For similar reasons, a transaction time-locked for long after the lender is available. This allows the borrower to eventually claim back their collateral if the oracles and lender become unresponsive. By slightly modifying the DLC protocol to include a basic hash lock and the introduction of the liquidation mechanism similar to DLC Markets, the Lava protocol has created a variant of DLCs perfectly suited for Bitcoin collateralized lending. While the dependence on Oracle still exists, like with any DLC protocol or application, the entry and exit of the loan is completely atomic and trustless between the borrower and lender. This proves an immense amount of value in subtly tweaking existing Bitcoin contract structures to fit specific use cases and offers a pathway to meeting a widely demanded need in the ecosystem that does not present the systemic risk of instability that centralized equivalents created in the past. Pretty cool, pretty interesting stuff. So I guess it needs a little bit more development before I'd be ready to jump into one of these, but it's great to see this kind of technology being developed in the community. Finally, I wanted to highlight this week's featured post on Bitcoin Fortress Substack. Articles entitled The Speculative Attack on Fiat Currency, and I will include a link in the show notes, and if you like it, please subscribe. It's free on Substack. Also wanted to give a shout out to this week's top boost on Fountain last week. At Lili with 544 sats, thank you very much. And at God's Death with 236 sats, thank you, sir. And thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. Nostr only. And with that, I will talk to y'all next week. Bye-bye.